Realtors, don't lose that listing because the seller will not reduce the price or just won't reduce it enough. Use this strategy instead. By now, you've been contacted by every single loan officer in the universe about this buy down strategy. Hi, my name is Teresa. I'm that loan officer. I am going to show you, number one, you're going to learn about how the program really works so that you can get in there and be an educator when you're negotiating the contract. Your job is to sell that house for the seller. So you want to understand how the program works. And number two, I'm going to give you a couple of negotiating strategies on how some of the agents I know are putting these together. One of my agent friends, Lynn, told me her last 3 listings had buy downs included in them with a little price reductions here and there. So, all right, let's get started. Now I have 2 buy downs. I have one for a purchase price of $1 million, and then I have a 575. So I feel like I'm going to go over the 575 one just because it's a little bit, I think it's just a little bit easier and smaller numbers, right? Let me see. Where can I put this? All right. Purchase price, 575. This is a 3.5% down FHA loan. These payments that we're going to go over do not have taxes and insurance. And this one, the taxes and insurance is $1,083. So let's just round it up and say another $1,100. So the note rate is 6%. That's what it priced out a couple of days ago when I put this together for one of my clients, Betty Buydown. Her agent, Shelly Steamhead, and the listing agent, Betty Barracuda. Man, she's terrible. You do not want to work with her. All right, so 6%. Now, I want your eyes to follow me. I want you to follow my cursor because there's a lot of information here. I want to draw your attention. There's a 1-0 buy down, a 1-1 buy down, a 2-1 buy down, and a 3-2-1 buy down. So let me show you a little bit more about how they work. Now, I think what I'm going to do is I'm going to make this just a little bit smaller. There we go. All right. So, all right. 1-1 buy, or the 1-0 buy down. Basically, you're buying it down 1% for the first year. And that costs on 575. The seller is going to need to pay $48.55. And essentially what the seller is doing, the seller is taking this $4,800 and they're prepaying the payment for the buyer for a period of time. The 1-1 buy down, year 1 it's 5%, and year 2 it's 5%. So there's no jumping up. So for 2 years they get the benefit of this $29.78 payment. Now the note rate is 6% and $33.26. So they're saving like $350 a month here. Now on this buy down, the seller needs to pay $8,323. So 1.5 points. On a 2-1 buy down, it goes to 4%. Then first year, right? 4%. Second year, 5%. And then the third year, it goes to the note rate. And look at the savings here on this 4% one. It's almost $700. So this is going to be, if you did the 2-1 buy down, that's a pretty strong incentive for somebody that's, just kind of balking a little bit on the interest rates. And I had looked at this program when it was in the 7s, when rates were in the 7s, and I don't know, I just really didn't like it that much. But now that the rates have come down a little bit and are expected to continue to come down a little bit, I'm really liking this. I'm really liking this program. The 3-2-1 buy down. Now this is the most aggressive buy down for your buyer. It costs the seller almost $25,000. So it depends on how It depends on a lot of things, but really it depends on how aggressive, how bad does the seller want to get rid of the house at the price that your buyer has written the offer, or if you're a listing agent that offer has come in. But this is quite the incentive to throw at somebody. Year one, it's 3%. So the payment's $23.39 plus the $1,100 taxes, insurance, right? That's almost $1,000 a month savings. That is huge. Isn't it funny? Like, that's where we were, last year and the beginning of the year. It's so crazy. Now, every year it goes, so 3, 4, 5, right? So it's graduating up. And then at the 4th year, it goes to 6%. I want to tell you this is super, super important. Now, what if year one, our client gets all the way to the end and they've saved $8,000 off their payment, right? Because the seller gave a $13,000 credit. The interest rates come down to 4%. Our client has a note rate of 6%. So what you can do on an FHA is you can streamline down to, with no appraisal, you can streamline down to 4%. So they're going to eliminate that actual note rate. And this money right here, this $4,000 that was given to them by the seller, that will go to a principal reduction. So there's going to be no loss of closing cost credit. So that's really, really amazing. Now, I personally am one of those people that if I'm going to get $25,000, I probably wouldn't use it to subsidize my payments. I would probably prefer to buy that house for $550 instead of $575. Everybody's end game is different though. I'm already a homeowner. I own homes. For somebody just starting out, somebody that is in an increased income trajectory at their employment, it works really well for. So, I think when I first got when I got my first condo, I did a 2-1 buy down, and it was really awesome until it wasn't, until the payment went all the way up. So we just have to be, as loan professionals, we have to be very, very careful that it's a good fit for the buyer. And if it is, it's a really good strategy for the agent too. So that is the one at $575, and it works on. This is a condo I did for a friend of mine, Danielle Rivas, in Newport Beach, and she just did a little price reduction. I think this was at $1,040,000 or so. So the seller's like, been on the market, I don't know, maybe 3 weeks, 2 weeks, something like that. So they did a price reduction to $1,010,000. I did this FHA because we don't know what the future is going to hold. We do pretty much know that the rates are going to come down. That is something we pretty much do know. When we're in the thick of the recession next year, what if this house lost value? What if somebody paid $1 million for this house, but it was really only worth like $900,000 in the middle of next year when the rates go down? This person would not have enough equity to refinance. And what a shame that would be, right? That if the rates went down to 3.5 or 4, they couldn't get out of this 5.5 rate. In this instance, they can, because FHA rates are lower. Yeah, you have a little bit more mortgage insurance, but it's an incredible leverage. It's an incredible leverage and setup opportunity to take advantage and position yourself the best way possible. On this one, you can see that the note rate is 5.5. You got the 1.0 buy down, the 1.1, the 2.1, and obviously it's a higher loan amount, so it's going to be a higher cost. So the 1.1 buy down is costing $13,000, and that's really nothing to throw at a buyer when you're looking at possible $40,000 or $50,000 price reduction. This could be something where you went to the seller and said, "Hey, what if we do a buy down $13,000 and then lower the sales price $15,000. So we're taking a $25,000 hit, not a $50,000 hit. And the negotiation process, that's a whole thing. So it's just, there's so many ways to structure this. 2-1 buy down, $20,000. But for some people, that's a lot for the seller, but prices have come down 10 to 15% in 2022. That is a fact, and they're trending lower. One thing I want to say about that, though, is when the rates are going higher, demand goes lower because of affordability. So if the rates start to come down, demand will slowly start to increase. So we just have to it's one of those fine line things. We have to be really careful about how we tread moving forward. Now, I want to take you to Sexy Town right now. Are you ready? Are you ready for Sexy Town? So on this particular loan, this is a 3-2-1 buy down. I love this. I love this product. It's very expensive, but there's a huge benefit for a buyer that is in a career path where they're going to have increased income. You have to qualify off that 6% rate. So the first year it's 2.5% from 5.5%, right? And they're saving almost $1,600. So that could make or break a buyer into possibly, buying in a time when they're just a little bit uncomfortable. Buyers are just a tiny bit uncomfortable right now. And so if we can do something like this, or even, the 1-1 buy down, and get them out of that uncomfortable, icky feeling, then you're doing yourself a favor and your your seller a favor, because you're not having to take as big a hit. I'm a realtor's lender. That's what I do. I help realtors navigate the purchase process. And a lot of my realtor friends and realtor clients are telling me that one of the best strategies that they're using is a combination of closing cost credit, buy down, and or price reduction. So one of my friends, Lynn Perry Munger, her last 3 transactions, which were all I want to say Rancho Cucamonga, Upland, Redlands, those areas, she utilized a combination of buy down along with a price reduction, and that saved her seller thousands of dollars and made 3 super happy buyers. So let me know what you think. Tell me below what you think about this strategy. If you have any questions about any of the costs or how it works, or you need any kind of assistance with one of your listings, reach out to me. I'm happy to help. And if you're a consumer and you just happened along here on my channel, please like and subscribe and comment. I would love to hear from you. And you can always reach me, call or text to 909-920-3500. Have a beautiful day.